All right, let's take a look at gold ahead of the FOMC announcement later today. Um, as I noted the other day, gold is almost certainly moving down into a daily cycle low. Still pretty early. My expectation is we may get some kind of a reversal or bounce after the FOMC meeting, but I don't think you should bite on that. I think it will either fade away quickly before the end of the day, or it'll fade away um, over the course of the week, over Thursday and Friday, and we're going to continue down. Probably going to break this daily cycle low during this move into the daily cycle low. So a failed daily cycle, more than likely. I know there are some people that are looking at a triangle pattern in gold and using that as an excuse for why gold is about to launch to the moon. As I said, there's literally dozens, if not hundreds of analysts that are going to tell you that any day now gold is going to go to the moon, and that's how you sell subscriptions. Gold bugs tend to be very emotional type traders, and they they believe wholeheartedly that gold should only go up. Um, but like every asset, gold has periods of corrections, and also it's one of the most heavily manipulated markets on the planet. So um, I'm not going to tell you that gold is going up or going to launch to the moon every day, especially when it's in a downtrend. So um, people that have listened to me have, saved themselves some losses on this, um, and we're just going to have to be patient here and trade something else while gold finishes this. It seems pretty clear to me that gold is moving down into its 8-year cycle low. I think that 8-year cycle is going to shrink a bit and maybe be done sometime next year. So it may not take as long as it would first appear, like out to 2024. I don't think it's going to take that long, um, but still, this is just not the time to listen to all these gold pumpers and scammers that are telling you gold is going to the moon. It's just not yet. And right now we're moving down into a daily cycle low. So you want to take any bounces with a grain of salt here. This is probably not going to be over for another week or two, and probably going to break this low. Now there are, as I've said, the people that will listen to me and not be so single-mindedly focused only on precious metals. There are areas that are tradable and that are going up, and you can make money in those sectors while you wait for uh, gold to finish its move. Oh, and I was also going to note this triangle. Um, I see people pointing out this triangle, and that means that gold is going to break out and go to the moon any day now. But usually triangles break on the flat side. So this triangle is not really set up for a break to the upside. It's more set up for a break to the downside because this is the flat side of the triangle. All right, now let me show you a couple areas that are still going up where you can make some money on the long side. All right, so a completely different looking chart. This is a chart that's going from lower left to upper right. It's still in a bull move. Now we may be setting up for a dip into a half cycle low right after the FOMC meeting today, but that should be a buying opportunity. It should be over with fairly quickly. We're getting pretty overbought, but we're not getting divergences yet that would indicate that we're about to see a little bit larger daily cycle top. So if we were to get a 2 or 3 day dip after the FOMC meeting that brings this RSI back down, and then we get another rally that makes a higher high, but the RSI doesn't confirm and diverges, then that would be the signal that we're about to drop into a daily cycle low. But I'm just talking a minor correction, something that looks like this. It doesn't last very long. Usually by the time the RSI gets oversold, then you start the next rally, which is exactly what happened here. So that's all I'm looking for. Um, After, if we do get a move into a half cycle low, would be another move up, higher highs, and then a divergence in the RSI. But anyway, this is a market you can trade from the long side, still going up. And for heaven's sake, don't listen to these gold analysts that are telling you the stock market's going to crash any day now. It's not yet. It's going to, I think, but I think it has to finish the parabolic bubble phase before that's going to happen. I mean, literally, central banks have pumped trillions of currency units into the market. It's got to create a bubble somewhere. And the bubble's not going to be in gold. Gold is going down. The bubble's got to be in what is still going up, and that's stocks. So this is an area you can trade from the long side. And you may get a little dip here after the FOMC meeting that you can buy. Now let's go to oil. All right, so yesterday's video, I noted that you didn't need to be in a big rush to buy oil. I thought there was either going to be some more downside, or we're going to get stuck in a triangle um, continuation pattern for maybe another week or so. Could go either way. We could still be stuck in a triangle, although this is getting kind of close. I tend to think this is probably going to play out as an ABC move. So here was our A wave down, our B wave bounce, and we're trying to break this trend line. Daily cycle lows really should break the daily cycle uptrend line. So I'm going to say we probably got a little further to go. And if the stock market drops into a half cycle low, the selling could continue to infect energy markets, and we get a little bit deeper move down in oil, breaks this trend line, pushes the RSI to fully oversold levels, and then that's going to be your buying opportunity in oil, because I don't think this resistance is going to hold. I think oil is going to break through this and then go to 91. So let me get the bigger chart here. All right, so this is why we started down into the daily cycle low. It doesn't have anything to do with fundamentals. We finally hit a resistance zone that caused enough traders to go ahead and lock up profits. I mean, this has been one heck of a move here, and so traders are looking for an excuse to take profits, and this was the excuse. We hit a resistance zone, but I don't think that is going to stop this intermediate rally. This was an intermediate cycle low here, and I don't think it's going to stop this rally. And there's a reason why this is such a powerful and strongly trending move. Is because we got such a extreme pull to the downside that the rubber band was really stretched to the downside here at the bottom in 2020. Oil briefly traded negative, I think it was negative $35. So we are correcting for that stretch to the downside here, and it's occurring with this extremely powerful and extremely strong trending move in oil, and I don't think it's anywhere near done yet. And the bull market in commodities and inflation should still have 4, 5, maybe as many as 8 years to run yet. So this has a long way to go, but this is why we're getting such a strong trending move here. Is it just got stretched obscenely far to the downside here at the bottom. But I think this resistance is going to give way, and oil is going higher. So once we're done with this first daily cycle low, I think oil is going to break through this resistance and go to this resistance at $91, and maybe even break through that and test $100 before this intermediate cycle tops. But for the next month or two, I would say this is our target here at about 91. Once we finish moving down into this daily cycle low, which should have a little bit further to go, I think.